Welcome back to my channel. In this video, I'm going to be covering a company by the name of Dow. Dow is a quality company that's been around for a long time, and they make a lot of the materials, a lot of the coatings, they end up in products. So although we don't buy Dow products as a consumer, at the store or at Home Depot, they really are a part of the supply chain to a lot of manufactured products and are a really respected chemical company. I like investing in companies like this. They tend to be very stable. They pay dividends. And again, it's a good quality company with a quality balance sheet. Dow announced their earnings last week, and I was able to update my valuation of Dow based on the third quarter that was closed in 2023 and make my best estimate as to where I think the stock is valued currently, where it's being priced, and if it's a good buy or if it's not. I'm going to get to that conclusion at the end of this video. I'll go through my process that I use and explain that to you, explain my point of view as an investor, and hopefully you find that interesting. Do me a favor and like my video and subscribe to my channel. That helps the channel out, and I'd appreciate that. And please comment. Love to hear your comments on this company, on the video, or anything else investing wise. Now let's take a look at Dow. As I look at companies, I like to follow a consistent process, and it's a process that I've created for myself as I look at companies, I invest in them, hold them, make money on them, in some cases lose money. And in both scenarios, whether I make money or lose money, I want to learn. One of the big returns of being an individual investor is knowledge and being that much better year after year, quarter after quarter. So keeping my process consistent is one of those tools and that'll enable me to just get better. And I have 4 questions followed by a decision to buy, hold, or sell. The first question, do I think it's a good company in a good industry? And that's an important question. And it's not a check the box, activity. Really understanding, where does Dow fit into the economy? How long have they been around? Have they been around, 10 days, 10 years, 100 years? Have they been a consistent company? Do they have a culture of success? Do they have a culture of really being conservative? And all the numbers that I'm going to see are going to be conservative numbers. So all those things come into a decision for me. Is it a good company? And is it an industry that I want to be a part of? And it leads into, how's the management team doing? Are they performing well? It could be a really good company, but the management team could be making a lot of mistakes, and it could really drive a company down. A good example would be Intel. A lot of bad decisions were made over the last 10 years. They used to be the leader, clear leader in semiconductors, and now they're the clear follower in the semiconductor industry. So a lot of bad decisions led to that. And that's basically the question, which is the company being operated well by the leadership? Debt has to be less than 3 times EBITDA, and this is a score on the balance sheet. If we have a bad balance sheet, that could really weigh a company down, especially right now with high interest rates. So we got to have a clean balance sheet, good, healthy balance sheet, and a discount. I buy stocks to make money, and the clearest line for me is I buy a stock that I believe is discounted, either the market sold off and created a really attractive purchase price, a company is misunderstood. I believe in a company, I believe in a company is going to really do well over the next 5 years, but the market doesn't. And that's where the discount comes into play. And I want a nice discount so I can make money on the stock. And based on the answers to those questions, I'll buy, hold, or sell this particular stock. So just taking a look at the company, very high level. Dow gets into packaging and specialty plastics. So you might pick up a product at the store or pharmacy where Dow actually produced some of those materials. They have performance coatings. So the car that you're looking at on the showroom might be have coatings from Dow. and then they have industrial and infrastructure products. So they help in construction. So you might see a building and it's constructed with some components that came from Dow. So these are products that, again, they don't have the Dow brand on them when we shop at Home Depot, but they're in the supply chains. They are a very respected company that is integrated in other products that we readily buy and are a part of our economy. Overall, I like Dow. I think they have good barriers of entry into their business, meaning in order to operate the type of business they have, you have to have a huge refinery factory type operation. It takes a lot of capital, takes a lot of know-how, takes a lot of engineers. And that is a barrier for other competitors to freely come in and say, oh yeah, I'm just going to start competing against Dow. Dow will have competition, from international markets, where internationally, other companies or other countries will set up operations to try to compete against Dow. So that is one of the threats. But overall, Dow is a very respected company in the U.S., providing these types of materials, and they've been doing it for a long time. Very old company that has been doing it for a long time. Looking at the financials that were released in their quarterly update, the story of Dow is the story of the economy. Their sales are down, and principally because economic activity globally is down. So it was a significant drop in revenue that Dow is experiencing, and that's mainly because production around the world is lagging. So it's telling us that we're in a recession, going into a recession. Just, the economy is not booming right now. So that's understandable. I understand that, hey, Dow cannot sell in a market where, things are the economic activity is down. They're going to be subject to the economic head or tailwinds. Overall, it's a very well-operated company because they continue to be profitable. Even though their revenue is down significantly, they've been able to have the discipline to be profitable. So that's very good to see. And they keep generating cash. I'm going to be using free cash flow as one of the key valuation metrics, and they continue to generate free cash. So that's good to see. I believe that Dow is fairly priced at this time, and there's really only about a 1% discount, meaning I think each share is worth $48.61 to me, and they're being priced in the market at $48.11. So it's a fairly priced stock. I value it based on free cash flows, and this is an annualized run rate, taking the first 3 quarters and then annualizing that number and really growing from there, because it's a low point in free cash flows. I'm growing it by 10%. And their terminal value, this is a consistent cash flow generating company, very stable, established, mature business. And in the future, I'm expecting after year 4 that they're going to generate all these free cash flows into the future. I'm going to discount by 9%, a nice high weighted average cost of capital. So I get to a value of all those free cash flows of nearly $48 billion. I'll add the cash on the balance sheet and take away the debt to get to an equity value of $36.3 billion. But the company is valued based on market cap at $33.7 billion. So using the free cash flow method, there's about a 7% discount. Earnings per share is not looking great. It's had great earnings per share in years past, but as you can see, the drop in revenue has caused a drop in profit. So the earnings per share that I'm expecting for 24 is 285, a PE of 20, which is reasonable, conservative, but reasonable for this industry. And they'll grow that earnings per share by 4%. And discounting the earnings per share, we're going to get to $42.65, which is being sold at a premium compared to the current stock price of 11%. I blend those two, but take more weight into free cash flow to get to a 1% discount on Dow. And my conclusion is that it's being fairly priced. The stock does pay a nice dividend. It's well above 5%. And the balance sheet is in great health. The EBITDA to debt is 2.2. So in over 2 years, they can pay off all their debt if they needed to, just operating the company. So the balance sheet's in good health. Looking at where the stock has traded for Dow over the last 5 years, it's interesting that, other than the COVID year, it's been hovering consistently around a trading range. We're currently at $48.11 a share is where it's priced, and my valuation's right on top of that. But it wasn't trading too much higher in its high point. It was nearly 70 as a stock price. And I think that the company stock tends to be stable. Year to date, it's down 5%, 5.7%, and it pays a 5.82% dividend. So I'm expecting that, this stock price, you wouldn't double your money in the next 5 years. You would see a modest rise, but you'd be hanging on for this dividend. So this is definitely a part of my income portfolio versus my growth stock portfolio. And the reason for it is it's a staple company that pays a nice dividend. All right, so should I buy, hold, or sell Dow based on my valuation, based on the earnings they just released, and everything else? Let's take a close look. So first on the company and the industry, I like Dow. I think part of my skill set is that, I've been, working for a long time and really know the industry, know the economy. And I know that Dow is a key player in the overall economy. So I like that they are very well respected. They have a very established, mature business. And I like their industry because it's very hard to break into an industry like this. I think Dow has a lot of stickiness with their customers. So I give them a check mark on the company, industry. I think their management team's doing a really good job. And the reason for it is, the global economy, Dow can't control that, but they could adjust, and they've been adjusting their cost and maintaining profitability, which is very good. Sometimes you see companies, they have headwinds from the global economy, and they go from being profitable to really losing money, and Dow didn't do that. So good job to the management team for really leading the company through this downturn. Debt is less than 3 times EBITDA, so the balance sheet's in good health, and they don't offer a discount. So based on the fact that there's no discount available, just a fair priced stock, I'm going to hold. I like the company, but I think if they could improve their earnings per share, the valuation is going to go up. And as the global economy improves, the valuation is going to go up. So I'll keep, monitoring the company and try to be a little early on when this stock's going to rise, so I can buy it at a discount and then watch my investment go up in value. But for now, I'm just going to be holding my shares. So that's my analysis on Dow, as well as my investing plan for this company. Again, I think the company is a solid company. This is a company that's been around for the last 100 years and will be around for the next 100 years, I expect. So it's a really good, solid company. Pays a really high dividend of 5%. So that's really good to know as well. And I think there's good upside in the stock over the next 5 years, but I'll have to be patient. It's not one of those things where it's going to happen overnight. We're in a bear market right now, so stocks just keep getting punished. The prices keep going down. That's a really good opportunity to buy into really good companies that I want to hold for the next 5-10 years and really benefit from the stock prices going up over time and these companies paying a really nice dividend. So thanks for watching. I appreciate it. Please leave a comment on Dow. Tell me what you think about the company. And please like my video and subscribe to my channel. I'd really appreciate that. Good luck investing in 2023.